Welcome to today's Kenya stock market update. How have the different stocks or shares performed at the NSE today? Of course, there is still the aftermath of earlier in the week good progress at the NSE, where the market did surpass 4 trillion Kenya shillings in market capitalization for the first time. And also, in addition to that, we are seeing ripple effect of other recent announcements. For example, yesterday's announcement by the Office of the Director of Public Prosecution that he's going to charge 3 Tier 1 bank CEOs with aiding fraud to happen through their banking systems. That is also having ripple effect in the market. Let's jump right in it for you to understand what is happening. In case you are new here, my name is Afagza Sifuna. I am a finance expert and qualified accountant, bringing you amazing videos daily about investing and making money. In case you like those kind of topics, remember to subscribe and also like this video. Having said that, over the past 24 hours, we're talking about the NSE 20 share index having dropped by 24 basis points, right? And beyond that, specific sector performances, starting with agriculture. Agriculture sector has largely been in the red, guys. And this so because virtually all the companies did have a drop in their shares. The ones which did drop is because they are extremely low volume, so their movements were actually negligible. And the biggest losers were first and foremost Capture Tea, whose stock did drop by 3.45%. That was a 3.45% reduction on Capture Tea stock. And this decline largely followed the stock trading ex-dividend after its book closed on 31st of July, barely 1 week ago, meaning new buyers are no longer entitled to recent declared dividends. Therefore, the stock also did dip to reflect the ex-dividend. And then the second biggest losers was EGADS. And EGADS did lose 1.16% on its stock. The stock eased as investors continued taking profit following its impressive rally this year. Investor sentiment also remained subdued due to the company's continued dividend freeze because EGADS, despite making some margin or profit, didn't pay any dividends, or the board of directors didn't declare any dividends payment to shareholders this year. And then the second sector, which is automobile. Under automobile, of course, we only have one company, Car & General, and this company did have a modest gain on its stock because it gained 0.8% today in the market. The stock continues to attract buyers following strong year-to-date performance. And I'm saying so because this company really gained insane over the past 1 year because they did gain by over 400%, and just year to date is gained upwards of 200% on its stock. Therefore, it continues to attract buyers, and also that together with improved dividend payouts makes the stock attractive. And then the third sector, which is banking sector. Guys, banking sector today, of course, was one of the strongest performers, with many counters having positive gain. And the biggest gainers were, first and foremost, we have the Bank of Kigali, which did gain by 2.08%. Of course, this is a cross-listing and it's also benefiting from the momentum in the market, right? And then the second biggest gainer was Co-operative Bank, which did gain by 1.29%. And this was because of investors' confidence remain in that particular stock, right? And also because of attractive dividend profile. And good news, whereby 2 days ago, it did reduce its lending rate in line with the Kosonia pricing framework. Therefore, that announcement which was made 2 days ago has also contributed to this particular rise in the stock of Co-operative Bank. And then third gainer was Standard Chartered Bank, whose gain was more above price correction, really because of the market performance. And then the biggest losers, we have two. At number one as the biggest loser, we have KCB Group. And KCB stock did reduce by 1.17%. And this so because we are talking about investors reacting to recent legal development involving members of the senior management at KCB who are locked in legal tussle. Because yesterday we were talking about the Office of the Director of Public Prosecution indicating it will charge 3 CEOs of 3 banks, KCB, Co-Bank, and NCBA, for aiding fraud, right? So that also has sent some shockwave in the market, and KCB stock has been a casualty of that. And then the second biggest loser is Equity Bank, which we saw drop by 1.16% today. And this decline largely reflects institutional profit taking following the bank's strong rally. So really not cause for alarm on that end. And then the fourth sector is commercial and services. This sector was largely in the negative today. And I think this is one of the sectors which has really been struggling in the market with being on the negative week in, week out. And I'm saying so because the biggest gainer was Samia Africa, which gained 4.72%, right? And the stock benefited from investor rotation into smaller and mid-cap counters following the shockwave in the banking sector. And then also we have Kenya Airways, which did gain by 0.73%. And Kenya Airways gain was mainly driven by recent good news from Cape Town, where it did have an incident upon being in the airspace of South Africa, but then again, all the passengers were safe and sound, basically ensuring that they exercise their optimal safety measures to ensure all the passengers were safe. And also, it's because investors are actually diversifying as they are moving from the large cap banking sector shockwave, following the shockwave which hit the market from yesterday in the evening. And then the biggest losers are number one, have Standard Group. Guys, this company has just been experiencing challenges, right? Ranging from non-payments and also tussles with the state. And the second loser was Scan Group, which did lose by 1.90%. And this was mainly due to ongoing corporate governance challenges, which have been going on for some time. We all know the previous CEO was kicked out a few years back, but there's been a shadow of that within the company management and also recent changes, right? So that corporate governance dynamic has been quite off. And also because of the company's financial position, because we are talking about it in recent years, issuing profit warnings back to back. And then the fifth sector is construction and allied. Guys, these sector recorded modest gains, right? Of course, most of the companies there are suspended because a good chunk of the counters were suspended 2018, 2021, you name it. But two of the three which are active, we had gained a little bit gain on Camberga, which gained by 0.41%, and East Africa Portland Cement, which did gain by about 0.2%. These actually reflects them benefiting from mild bargain hunting and, of course, portfolio rebalancing, which is happening within the Nairobi Securities Exchange. And then the sixth sector is energy and petroleum. Under energy and petroleum today, most of the companies were on the negative. And guys, the companies were on the negative, all of them except Umeme Limited. And Umeme, which is also a cross-listing from a Ugandan company, is mainly because of it reflecting the positive performance in the market at the NSE this week. But then again, the other energy companies did have a decline on their stocks. The biggest casualty was KenGen, whose stock did decline by 3.57%. And this decline was mainly driven by profit taking following a strong multi-month rally. And also beyond that, investors were cautious, right? Because government did announce limits around domestic carbon credits, right? Given it's also operating in the green space and having interest in that end, that is also bound to affect the stocks of KenGen. And then Kenya Power did decline by 1.19%. And the utility came under pressure as investors did book profit after recent gains, but also there's long-standing issues around transmission and reliability of electricity, which could also be impacting the stock of Kenya Power. And then the seventh sector is insurance. The insurance sector did deliver mixed performance because some companies did gain on their stocks while others did decline. The biggest gainer was, of course, Jubilee Holding, which did gain by 1.51%, and the stock attracted bargain hunters supported by its strong balance sheet. Of course, it's doing very well financially, and also it did diversify, of course, in the region, and thus that together with its reputation really contributed to its stock increasing in price. And the second biggest gainer was Liberty Kenya Limited, which marginally gained by 0.43% today. And this gain reflects modest technical recovery after earlier in the week decline on its stock. And then the biggest losers were, first and foremost, we have Sanlam Kenya Limited, which did lose by 5.81%. This sharp declines appears to have been amplified by thin trading volumes. Remember, it's quite a thin volume stock, and then also profit taking continued to subdue this to also impact this particular stock, and then also there was subdued investors' sentiments following absence of dividend payout. Sanlam didn't pay dividends. Therefore, also investors on this particular stock were quite cautious, or confidence did dip because of that. And then the second biggest loser was CIC Insurance, which lost by 3.7%. And this was more about the stock retreating as investors locked in recent gains on that particular stock. And then the third loser, which I want to talk about, was Kenya Re, which did lose by 3.4%. Kenya Re is at an interesting stage because, guys, it is experiencing very dire corporate governance issues, right from the board of directors, where we saw a very recent ouster by the National Treasury, and also the CEO of Kenya Re is experiencing cases in court relating to harassment within the workplace and also procurement issues. That also hitting the market, most of the recent court announcement, which I think actually the news was out about 2 days ago, that is also impacting the stocks of Kenya Re. And then the eighth sector is investment. Investment sector did have a mix of results or performance today. And I'm saying so because the biggest gainer was Home Africa, which did gain by 3.57%. And this was largely driven by speculative trading and also movement of capital across different sectors. Nothing related to fundamentals, really. And then the biggest losers were, at number one, we have Centum, which in fact today was the biggest loser at the entire NSE. Its stock did reduce by 6.82%. And Centum did emerge as the worst performing stock today because investors were actually reacting to the recently released full year financial results. Of course, in that particular financial results, key sectors did have a decline in their profit. And also that did trigger, of course, significant profit taking in the market, right? And then the second biggest loser was Olympia Capital, which did lose by 2.46%. Of course, this is a continuation of the downward trend on this particular stock because we all know beyond just profit taking happening, there's also been concerns over the company's weak underlying earnings. Because sometime earlier in the year, I think it was at the end of Q1 or start of Q2, it did announce its worst ever performance in about 20 years. Olympia Capital. So that is also having ripple effect on its stock. And then the ninth sector, we have investment services, which of course is the self-listing by the NSE, which did gain by about 0.60%. And these actually indicate that the exchange operator continued benefiting from improving trading activity and stronger investor participation in the market. Basically put, is an overall indication of the market because NSE also has its own self-listing there. And then the 10th sector is manufacturing and allied. Manufacturing sector was broadly weaker, guys, because of different reasons, right? Of course, the biggest gainer today was Unga Limited, and it did gain by about 2%, broadly due to bargain hunting happening, and also investors doing repositioning across the different stocks. And then the second biggest gainer was East Africa Breweries, which did gain by about 1.40%. And these continued to benefit from positive sentiments by investors and also resilient consumer demand and expectations on stable earnings growth on this particular stock. This is one of the mature companies at the NSE and it's been doing very well. So also investors are banking on it to continue to do well. And then the biggest losers, at number one, we have Shri Krishna Overseas Limited, which lost by about 3.70%. Guys, this is a small cap counter. So any movement is going to cause pressure whichever direction. So the movements in the market did impact this counter today negatively, therefore affecting this particular loss. And then the second biggest loser was Afrimega Agriculture Corporation, which did lose by about 1.58% on its stock. This was mainly due to subdued interest by investors and also limited market liquidity on this particular stock. And then, guys, at sector number 11, we have telecommunications, which is single listing by Safaricom. Today, Safaricom stock did gain by 1.01%, which of course is a recovery from yesterday. Given yesterday, it was handling some ex-dividend dynamics. But then again, today's gain of 1.01% is a reflection of the recent AGM positive outcomes and just general positive sentiments by investors on this particular stock. And then the 12th sector is real estate. No movement in that particular sector because the risks at the NSE are traded in closed counters. So there wasn't any movement on that particular sector at the NSE today. And then 13th sector is the ETFs or exchange traded funds. And on the ETFs, we had mixed results, where the new gold ETF did gain by about 0.4%, which is a reflection of the global spot market for gold, where there was a mild recovery globally. Therefore, it did result in a decreased dollar pressure, which as a result caused also the NSE to have slight gain on this particular ETF. And then the second ETF is Satrix World Feeder, where there was no change. Simply put, the underlying equities didn't have any positive momentum. Therefore, because of lack of momentum, either positive or negative, there was no change on this particular ETF today. Guys, that's how the NSE stocks today have performed. What do you think? Comment down below. Let's continue discussing. Cheers, guys, and happy investing.